Okay, everybody, it's me, Gregory Mannarino. It is Wednesday. Just a lovely day. May 4th, 2022. This is my post-market wrap-up. Sit down, relax, and let's just savor the moment for a moment or two. Yeah, let's just sit back and enjoy it. You know, we're allowed to do that. What happened today? As we expected, as was widely expected, the Federal Reserve raised the federal funds rate 50 basis points. This was pretty much baked in. However, what was not baked in and why this market took off, we're talking about a Dow Jones Industrial Average almost 1,000 points higher today. The NASDAQ, the biggest gainer of the morning. Let me explain this to you before I go further. For months now, this stock market has been on sale. On sale. Now, for those of us who have been smart enough to recognize that, for those of us who have been adding to our positions here, including the banks trolls out there, you're missing out. Did you like today? Did you miss out on that? You're going to miss out on more, believe me. Market is still on sale, okay? Especially after what Powell said. Let's put that into perspective. So, yes, lovely 50 basis point hike. Oh my gosh. But he made it very clear that the Federal Reserve will not be, anytime coming in the future, considering a 75 basis point hike. As a matter of fact, if you recall, right here on this lovely blog, I said I believed that we were going to get a 50 basis point hike. No surprise, pretty much common knowledge. The wording during his little conference there, I believe that, and the market believes it too, that despite the rhetoric, despite the nonsense, the Fed is going to keep the easy money going. And that means the Fed, especially since there will be no consideration of a 75 basis point hike, is more looking at maybe, taking it easy moving forward. And that's why the market, had an orgasm. You want to see what that looks like? Or just go look over at the major indices here. They took off like shot today. Anyway, look, there was a lot of talk here about balance sheet runoff. Okay, let's see how that plays out. In my view, and obviously the market's view, it's not going to stop, and you know that. Even in the event, let's just throw a hypothetical out here. All right, let's just conjure something up out of like nowhere for a moment, Let's say, for example, the Federal Reserve actually engages in some kind of quantitative tightening. Let's just say that. All right. You see, they have another mechanism now to continue to inflate. I'll give you one guess, or maybe two or three or four. It's called crisis after crisis after crisis that they're going to be throwing epic sums at. So, yeah, sure. You think this is by accident? Let's put that together. At the moment we were getting skyrocketing inflation faster than we've ever seen, all of a sudden over in another part of the world there's a war that is being funded by central banks because we have no money. We're broke. The United States is the most indebted nation in the history of the world. So you see how that whole mechanism, let's maybe do this, but at the same time we're going to do that. You understand? And now that they have, it's your patriotic duty to support every crisis that comes along. You have to give freaking the retard president that we have, Franken-mummy, whatever you want to call him, a blank check because it's your patriotic duty. You must do this. Sound familiar to you? Yeah. Anyway, yeah, that's the way it's going to go. So with that said, sure, quantitative tightening, lovely. Bring it on. Crisis to crisis to crisis are going to continue to allow central banks to inflate, and the market knows it. The market knows it. You think it's going to stop? Really? Honestly? And they floated out the creature today. Yeah, Bidenstein himself. Oh, yeah. We're going to do something about all this debt. Whatever comes out of his mouth, if he's telling you we're going to cut the debt, realize it's going to expand faster and wider than ever before. I think you understand. That's pretty clear. At least it should be. Anyway, with that said, I just dropped something. Give me a moment. I gotta get it. Notes. I was writing things down today. So let us just set the stage here a little bit. Let's recap. Big rally on Wall Street, broad-based. You got financials taken off. You got, obviously, oil and gas. Are you watching crude oil? It is surging higher. The dollar today cratered. When you see a move like this with regard to the relative strength of the dollar, or should I say its comparative strength, you got it, people? Finally, you're getting it. When you see a move of like 0.8% drop in the Dixie or the relative strength, that's huge. It's a huge move. Yes, it is. Up or down. And the fact of the matter is, the dollar cratered today on the back of what came out of his mouth. Oh yeah, we're going to be dumping assets. Really, the dollar doesn't think so. No, currency traders don't think so either. And no matter what they do, as you already clearly understand, the Fed is going to continue to inflate because we have the crisis mechanism put in place. Look, the timing of this, isn't it just kind of interesting to you? You think it's by accident? Let's see. The Fed misses its 2% goal with regard to target, with regard to inflation by exponents. Their numbers were over 8%, over 8.5%, as a matter of fact. Okay. So the Fed wants to introduce some kind of, they're gonna be, raising the federal funds rate, maybe some kind of, quantitative tightening beginning on June 1st. But then we go from COVID, okay, to which they've thrown over $3 trillion out with $1 trillion more to go already in the budget. Now we got a war that we have to continue to fund, and our illustrious president is asking for a blank check because it's your patriotic duty. So don't you see, you don't think that these things are timed out purposely? Everything is. Nothing ever happens by accident. The Roe v. Wade leak, you think that happened by accident too? You don't understand anything if you don't understand at least that you are being gamed. I did a video that was in the title recently. You are being gamed. You're being played. But you see, you and I, we're in a different category because we understand it. And realizing that puts us in an incredible position of strength. Incredible position of strength. You're going to stop betting against the debt. You're going to stop becoming your own central bank. You really believe the global debt is just going to miraculously stop? It can't. It's the nature of the beast. It must constantly and relentlessly be added to. So when you hear our illustrious retard president, who is sincerely brain dead, honestly, he obviously has issues that go beyond here. All right. Now, with that said, with him coming out explaining, oh yeah, we're going to do something, we're going to cut the debts and deficits. No, they're going to continue to balloon, just like this guy has explained to you since time and freaking memorial. Put me in the White House, and you see how things change. Really, seriously, maybe I should make a run. What do you think? How many of you would back me up? I would do things you wouldn't believe. I would change the whole damn dynamics of it all, and that's a fact. And I would get rid of this institution. I would get rid of them. I'd put on a bulletproof helmet. I don't want to get Kennedy'd. But, seriously, people, we could do it. We really could. Anyway, so with that said, cryptocurrencies higher as well today. Gold and silver catching a bid. Anyway, let us move forward here just a little bit. So let's talk about some more economic news that we got because our economy is so strong. So the ISM Services Index, this is their own gauge, okay, is pointing towards weaker growth moving forward in the services sector and weaker employment in the service sector, which has been a big part of the U.S. economy. As a matter of fact, we are a service sector economy. We don't make any things anymore. Clearly, we're not exporting a damn thing with our trade deficit ballooning 22% in a month. Make that up. Now, we're seeing here, this is also from the ISM Services Index, extreme weakness in job creation. Unbelievable. As the trade deficit continues to explode. The ADP labor report is showing that we are, in fact, slowing down. Imagine my surprise there, too. You can't imagine my surprise. Nobody can. It's totally out of control. I wanted to laugh today listening to Powell with his tools talk. His tools. He has one tool, the manipulation of debt. You all know that. How many times did we hear about the word appropriate? He loves that word, too. They all love that freaking word. And I want to give a shout out here to someone I pick on, or I used to pick on all the time, Steve Leisman. Steve, you did a good thing today, bro. So I'm going to rethink my the way I perceive you. He was the one, Steve Leisman, who asked the Fed chairman about a 75-point hike. I think it was staged. I'll be honest with you. I think Steve and the Fed chair kind of set that up. If I'm wrong, Steve, let me know. Either way, look, I don't care. It's a game. We all play the game. We know that. But I really believe this was a setup between Steve Leisman, Fed Chair Powell, to ask that question. Because if you noticed, the moment Steve asked the question, oh, Mr. Powell, how about a 75 basis point hike? And he fired back right away. Oh, no. Not even being considered. Market, boom. You want to tell me that wasn't a setup? Of course it was. Steve Leisman does have his nose so far up the Fed chair's rear end that he could seriously taste his breakfast. There's no doubt about it. Anyway, with that said, people, look, what else can I tell you? I think we covered all of this. One more thing. What happened to this market here? We, right here, spoke about a retest of that 4150 with regard to the S&P 500. We hit it. We broke through to the downside. We came back up pretty quickly, and now we've sincerely made a move higher. I would say that 4150 on the S&P is a hard floor right now. It is going to take a lot to fall back through that, especially in light of what we heard today. So with that said, people, look, as I have been explaining to you since this correction started, it's nothing but a technical correction. I'm not making this up. Look at some of the comments. Oh, Greg, you'll never admit it's a crash. You're always going to say it's a correction. When it becomes a crash or even a bear market, I'll let you know. With regard to the S&P 500, we're like 9% off of a record high after today. We were 13% just prior to this, and that, by definition, is a technical correction, all right? I think even the NASDAQ is out of bear market territory right now. We're not even down 20% anymore after today's rally. Anyway, look, people, we're in the right spots. We've been in the right spots for a long time. I've been putting out my positions in my newsletter. I just looked. I got over 62,000 people who subscribe to my free newsletter. Congratulations to all of you. Because you're going to get more information, not just from this blog. Look, I'm trying to keep this as real as I possibly can. Hey, look, one more thing. For those of you who hate PayPal, Greg, I'd love to support your work. I hate PayPal. Well, I have a new option for you. Look down here. You're going to see that little thanks thing with a little dollar sign. You think I'm doing a good job? Well, there's another opportunity for you. All right, look, I got your back. I know you got mine. We're going to get to all this together. And we are absolutely in the right spots. We've been smart enough, in my view, really, we've been smart enough to take advantage of everything that's going on around us, and we're not going to stop. After today, it's going to take a lot for this market to take a substantial drop. Let's see how it plays out. Again, I think 4150 is a hard floor now on the S&P 500. Are we going to test that again? I don't know. Things seem to be playing out like you and I expected it to. With the Fed raising rates, seeing that 10-year yield rate go higher, nothing dramatic, no bang, 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 bang. Just a nice, slow, gradual rise here. I still think we're going above 3. We're going to settle there. The market's going to love it. The market's going to get all giddy off of it. And the financials, including the banks, they're going to get orgasmic, multi-orgasmic over that too. Understand what's going on. Look, this is not a game that is designed for one entire particular class of people to win, and that is the middle class. If you are a member of the middle class, I am working very hard to at least try to lift you up, to get you onto the right side of this whole equation here. And I will not let you down. Am I always going to be right? No, I am not going to always be right. It's impossible. But I work very hard to give you information as straight as I can, as hard as I can, okay? And at the same time, I try to be correct. Believe me, I don't want to be wrong. I have a pretty big audience, and when I'm wrong about something, whatever it might be, it makes me feel pretty bad. But in aggregate, look at my track record for years. It's very, very hard for someone to say that I have not done a good job out here. All right, anyway, with that said, people, I really love all of you, and I will work harder than ever to make sure I keep you on the right side of this freak show. And it's going to be interesting to see how this plays out moving forward, especially after what happened today, this market. What I would like to see, let's see if we get this. A follow-through rally would be nice. Even though today was a pretty tremendous thing, it would be nice to see a follow-through. When you get a rally and then a follow-through, generally it's telling you that it has legs, that you can expect it to go further. I really believe this, and I've been telling you this for the longest time, despite the fact that our economy is cratering. It is in free fall. It's falling faster and failing faster than ever before. The market and the economy are completely disconnected. I've done this for you for years. I said the economy would continue to free fall. The market will continue to go higher. That is the mechanism in place. It's going to continue. Quantitative tightening or not, don't matter. They have their new thing now. Crisis, 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 inflate, inflate, and then inflate some more. I think you understand it. Let me know what you think about what I've covered here, what happened today, where you see things going. And if you tell me, look, it's fine to have a contrary view to mine. I just don't want to, I hate it when people say, oh, Greg can't stand it when people have a different view. No, I love that. I welcome it. But when they call you Greg, you're an idiot, you're a moron, retard. That ain't happening, all right? I'm not going to give anybody a platform for that. But if you have a contrary view to mine, please tell me about it, because I am not too old, believe it or not, to learn something new. But I think I've done a very good job in calling this. I've not rattled once for this entire, since the beginning of January when this market topped out. I've told you how to play this, and a lot of people jumping ship, running for the hills. They're looking in the wrong spots. They're being told by other YouTubers that this is a crash. Meanwhile, they're not being told this is literally a technical correction. They don't understand the mechanism of the market. The easy money is not going to stop. Whether it's going to be taken out of this and put into that, which is what it looks like it's going to be, maybe perhaps the Federal Reserve is going to engage in some kind, and we'll see it when we get there, some kind of quantitative tightening. But now that they have, this war over there that they can fund with all kinds of cash, why do they need to do anything else anymore? Crisis to crisis to crisis. Expect another one. Expect it to be bad. I know that you're ready. I always tell you, have the high ground. Don't I always tell you that? All right, look, I'm out of here. Kind of a long video. Please share it, get it out there, and I want to hear from you. Contrary view or not. If you have a contrary view, let me know. Give me something to read, something I can understand. Look, I'm not too smart, so keep it simple for me, And, kind of like if I were a golden retriever or something like that. You see where I'm going with this? All right, look, love you a lot. I mean it. I'll see you later. No, I'll see you in the morning.